Welcome to yet another segment of the budgets. As we promised you earlier that we're going to do a session on the tricks regarding budgets and also a big question that will handle lots of bits and pieces when it comes to budgets. So here I am, as most of you requested through text messages and some phone calls, that we do this session, and I want to say thank you so much for your support and for the contributions we've been making in our inbox and all of those text messages. Please, whenever you're not clear, feel free to text us or to give us a call in the number on our page. And as we'll be doing this session, I want to make mention that this topic is of utmost importance. It carries 25 marks and 40 marks in either DA or CA respectively. So to help us do these tricks, I have made a PDF file and I've named it Budget Tricks Part 1. So you should be able to download it just in the description below, or if you can't see it in the description, you'll be able to see it on the post before this post. I've already uploaded the PDF file, so everything I'm going to say is already documented. You can simply download and read through. So to start, I want us to begin by talking about functional budgets. But before we do that, I mentioned earlier, I left you with a question: what is a budget? Well, a budget in the layman's language is simply a detailed plan for the forthcoming period. Is that so layman? I don't think so. That sounds technical. But a budget, yes, it is a detailed plan for the forthcoming period. And you're going to agree with me that people plan for things because they want to achieve the results that they desire. So you plan because you want to achieve. So in management accounting, that plan has got to be explained in terms of figures, because you're going to show either the cash position using the cash budget, or you're going to show the expenditure involved in terms of materials, production, and things like that. So let's begin quickly. I'll be reading through the notes that I've made, so you should be able to follow through if you've downloaded that PDF. Number one, we are talking production and functional budgets. So, as you know, you can never come up with a production budget if you don't know what the demand is. There's an assumption that you produce according to what you are able to sell, unless the examiner tells you otherwise. Let's get that straight. You can't come with a production budget if you don't know what the sales units are. Know the sales, in other cases, know the demand, and then make the production budget. And in most companies, sales demand is usually the budget principal factor. That's why these other functional budgets will follow, such as labor, material usage, production, etc. So, to explain this point, I want to refer to the question from the Zika revision kit on page number 34, interestingly, and the question is number 34 also. So this question, there was a statement the examiner put in the question which I liked because it affected a lot of things in this question. So I'm going to just read for you, and then we're going to discuss this. Or if you want, you can just be following through, because everything I'm going to tell you I've already written down in the description below. Okay, so the question is number 34 from this revision kit. This should be 2017 revision kit, page number 34. And the question is called XPLC. XPLC. So I like the statement in the second paragraph. It says this, and I'm going to read for you so that we're able to discuss together. The statement reads: at the end of the production process, the products are tested. It is usual for 10% of those tested to be 40. It is not possible to rectify these 40 units. So in this statement, the examiner put a trick, and it was 40 units. He said every time there's production, the products are tested. However, after being tested, 10% of that production is 40, and it's not possible to rectify those 40 goods. So the first thing you needed to know is to know what are the 40 units. Why am I saying what are the 40 units? Because if you produce according to what you are being told in the question, you are going to miss out, because those 40 units won't be sold, they are damages. So whatever you're going to produce, remove the 40 units and then remain with a good normal production. So look at the demand. Let's say the demand is 10,000, and then they've told you that 10% of that production is 40. You cannot produce 10,000 units. You must produce 10,000 more than 10,000 units, so that when you less the 40 goods, you are going to remain with 10,000. Which means that even if you go to buy raw materials, the usage and calculating the labor hours, you must include 40 units. So this question said 10%. And so how do you get the actual production? That is the key. You must be able to know how to get the actual production. And I've put in the PDF. Actual production, how you get it, you get the normal production. So normal production, what was the normal production? Let's say the normal production was 350. So as this question went, as it were in this question. So what you do, get that 350, normal production, multiply by 100 over 100 minus 40%. So in this question, the examiner said the 40 goods were 10% of normal production. So get the normal production, multiply by 100, and then if you say over 100 minus 10%, you remain with 90%. That means the denominator will reduce by the percentage of 40 goods. So why are you making this fraction? This fraction is there to help you identify or determine the actual production that you are required to do. Why are you finding the actual production? Because you also want to know the amount of materials you are going to purchase. So you are going to purchase materials inclusive of the 40 units. When calculating labor, if it's 2 hours per unit, you are going to calculate labor hours inclusive of those 40 units, because you are going to produce them. The only difference is that you are not going to sell them because they are 40 units. So in calculating raw materials usage, calculating labor hours, calculating material purchase, include these 40 units. So that was a trick in question 34 of the Zika DA revision kit. That was the tricky part in that question. So please know how to deal with 40 units. And also be careful when it comes to opening inventories. If the opening inventories is 200 and then you're supposed to produce 400, that means you know you already have 200. So the demand is 400, produce 200, so the demand is 400. Don't produce more than the demand. Remember, opening inventory also can make you just lose the marks you need to get a 50. Okay, so let's move forward to another trick which I thought is worthy of mentioning. Cash budget, month counting. You know, lots of students, even the smartest of students, at some point have had a challenge with the counting of months. And it's not that they are not smart. You know, this English but it's just sometimes confusing. Sometimes even some well-vested individuals when it regards management accounting might find it difficult to count months. So how should you treat the counting of months? So to also help us, I want to refer you to the revision kit again. And this time around, I want to refer you to question number 35 in this same Rev Kit 2017 DA for Zika. I'm using Zika for the lab of Zika, and I feel it has a lot of, tough questions in comparison to these others which I know. Okay, so question 35 are the statements which I would like you to see in the description if you are following through, and it says something like this. It said, and I read for you what it said. It said, this company, in this case was HCO, allows 2 months credit to suppliers. Simple statement indeed. 2 months credit to suppliers. But that same statement, 2 months, allows 2 months credit to suppliers, has made a lot of students to fail this question. Because you must know when to start counting. When is the first month? And when is the second month? When is the last month of counting? So if you are told allows 2 months, it means they're simply telling you they are being paid after 2 months. In short. So in a question like this one, you have to assume that they are selling their products at the first day of the month in question. Take for example, if they are selling their sales in May, and then they allow 2 months credit to suppliers, to customers, it means that they're expecting to receive their monies in July. So you start counting from May 1. So you count from May 1. So May 1 to May 31st, or if whatever it is, and then June 1 to June 30th. You have 2 months. Start counting from May 1 to the last day of May, and then go to June 1 to the last day of June. That means you have now 2 months. 2 months has elapsed. That means July 1, it is the time for payment. So please know when to start counting. If you start counting, if they are selling in May, and then they allow 2 months credit, you start counting in June, boom. You've messed it up. So don't start counting in June. Start counting in May. Assume they are selling at the first day of May. Is that too much to ask? I think it's okay. Anyway, let's move on. Let's move on. That was a joke. Sure. Okay, so the other thing that I also researched on the counting of months, you are going to see also, for this one, please refer to question 37 of the revision kit, question 37. So let me just read for you. The other one is suppliers being paid 2 months after the materials is used. It's the same thing. Suppliers are being paid this time around 2 months after the material has been used. So you have to assume that the suppliers are selling to you, the company, at the first day of that month. So count from that first day of that month, the next day, the month end, then you're receiving your payments. So that's how you're supposed to count the months. How about this other one? I also wrote it down. It says customers are expected to pay at the end of the second month following sale. Customers are expected to pay, now not that, at the end of the second month after sale. So the examiner, like I mentioned earlier, in even the previous video, is always using same statements over and over again. The only thing he does, he changes the English. 2 months after sale, second month following the month of sale, 2 months credit, the same thing being asked in different ways. So now this time around, the examiner was very cunning. He said customers are expected to pay at the end of the second month following sale. At the end of the second month following sale. So what was the first month following sale? So let's say you sold in November. The first month following sale was December. The second month following sale was January. So you're supposed to make the payment in January. That's how you count that statement. So I hope it helps, and if you can't follow through, please refer to the PDF, and also please go to the IN DA REV kit. This is question number 37, and try it out. It will be able to help you. There are lots of bits and pieces in that question which can help you on the counting of months. Okay. So the other thing I want us to talk about is the percentage payment. Usually the examiner will tell you 50% was paid in month B, 60% was paid in month C, then maybe whatever percentage there is was paid in month so and so. How do you multiply the percentages? That's why there's an issue. Some people, what they do, they'll get the 50% by the total sales, then they remain with 50% of that, and then they apply the next percentage on the balance. If you do that, boom, you're gone. Don't multiply by the balance. The examiner is usually straightforward in these questions. It says 60% of the sales were paid in the month after sale, 10% in the month following the month which 60% was paid in. So let's put more light to this. Let me put it this way. Take, for example, they tell you that 50% was paid in month 1, 30% was paid in month 2, and then 15% was paid in month 3. Lastly, 5% goes to bad debts. You see? The only thing to remember when you see such kind of things in the exam, don't even panic, just be relaxed and simply multiply the percentage by the actual value of sales. Actual value of sales. Get the 50% multiplied by the actual value of sales. And the subsequent percentages also do the same. Do not multiply on the balance unless the examiner tells you that the 50% of the balance was paid in month 3. But if the exam does not specify, use the actual value of sales, not the balance. Okay. The other one that I would like us to talk about is the English. The English, sometimes, even people who speak good English find it difficult to understand the statements in management accounting, in the exam especially. And I want to give you an example of the Zika December 2018 exam. There was a statement which made most of the students to fail to get answers correct. Let me read the statement for you. I have the past paper with me here. Okay, so I have the past paper with me here. This is for DA. Yes, actually it also came the same question even in CA. It was the same question in December 2018. So this is the paper. Now the statement I want to read for you is this one. It says something like this. There was a statement which says something like this. Mulenga wishes to supply all the desks within the first 6 months of 2018, starting January 2018. Now get the point. It says his projection is to supply and deliver the desks evenly over the 6 months period. To supply the desks evenly over the 6 months period. Now in this question, the examiner gave the demand for the whole year. For the whole year, the examiner gave the demand. But he put a statement that Mulenga chose to supply these desks evenly over the 6 months period. It is very, very straightforward. And unfortunately, some students did not understand that they needed to divide the total sales for the year by 2 to get the production for 6 months, for the first 6 months, because the examiner said evenly, equal. The word even means equal, evenly, equally. So if you have 20,000 divided by 2, get 10,000 for the first 6 months, and then that 10,000 for the next 6 months. So just this simple English really made people to struggle so much, because some of them were calculating the production for the whole year. They didn't divide by 2 as it were in the question. So pay attention to some simple statements. Pay attention to some simple statements. This simple statement can mean the difference between a 49 and a 50. Remember, you are not in the business of wasting money. You are not in the business of wasting money. Remember to be patient, but to be fast and accurate. Okay, the first one I want us to talk about is footstops. You know, very easy thing to miss in the exam. A footstop. Let's say a footstop. So those footstops are put there for a reason. When you see a footstop, that small dot in front of a sentence, it means stop, think. If you're just reading things without stopping to think, you will miss out on big points. When dealing with a budget question, be able to see the footstops. See the footstops, because those stops, they're asking you to simply stop and think. See the footstop. So you'll be told a situation which only applies to the first part. So if you keep reading everything at once, you might end up confusing things in the exam. So be able to calm down, see the footstop, think about it, then move forward. It must just mean the difference between a 49 and a 50. Just one single footstop can make you fail the entire exam. So please, don't rush in the exam, don't panic in the exam, just see the footstop. Okay, so the other thing I wanted us to talk about is non-cash items. Number 6 is item. All these things I'm telling you, I've documented them down, and if you want to follow through, please just go to the description. And if you're not on our WhatsApp group, please you can just send your text as a message, then we'll take it up from there. We'll talk terms and things like that. Okay, non-cash items. What are non-cash items? Non-cash items, they mean what they say, non-cash. They are not cash, they are simply mere estimates. A good example of a non-cash item is depreciation. Do not include them. Leave them out. If they told you the deep figure was 25,000, just ignore it. It doesn't represent the actual amount of money. It is simply an estimate. So don't include it because it is not cash. It's not representing the actual cash. Some people, they will do everything correct and then they include the depreciation. That means you are going to overstate the expenses involved, because deep is a non-cash item. Okay. Treatment of fixed costs. In most fixed costs, they are fixed costs, and in most questions, fixed costs are the same from month 1 to the last month. And the examiner usually likes putting that statement in the exam. Just be able to see it as you are reading the questions. And last but not the least, the measurements. Point number 7 is measurements. What are measurements? Measurements can be units, liters, kgs, meters, etc. You should be able to know these measurements and how to convert them. For example, if they give you something, it is in centimeters, how do you convert that into meters? If it is in millimeters, how do you convert it into centimeters? Things like that. It is in grams, how do you convert that into kgs? Before exam day, you must be able to know these measurements and how to convert them. I will tell you a simple reason. Last semester, students, after writing the management accounting exam, most of them were very, very excited, and they called. They said, "Thank you so much. You helped us." And I was just asking them one question. How did you handle question 1? So, failure to convert units into their normal conversions might just mean the difference between a 49 and a 50. Most students last semester, if you are sincere, you're going to agree with me that they were very much happy about the management accounting exam because they said it was easy and it had a lot of theories and things like that. However, when the results came out, most of those who were very much happy were not so happy. It's sad to mention that. I was equally affected. I felt bad about the results. But I want to make mention that sometimes overexcitement in the exam can make you fail to achieve your greatest potential in the exam. No matter how easy you think the exam is, this paper requires you to do a lot of reasonings. MA requires you to do a lot of reasonings. You have to think, you have to apply the knowledge. Don't rush, don't be overexcited. Think through things before you calculate them. Think though you can think if you are the one in your life being asked to do what you have been asked to do. Take your time, don't panic. I will advise my students that this question is compulsory, and if I were you, because I know that the budget question consumes a lot of time. So it's only important that before you do this budget question, please do these other easy bits and pieces of the exams and then come back to the budget question later. It should be the last question you are doing in the exam unless you are sure that you know it very well, which I am confident that you guys will be able to do it on that fateful Tuesday morning as this question comes, because I can promise you it's always going to be there. It will be there. So please, what you're going to do in that exam on that Tuesday morning, think about what we've talked about. How to count months, the English involved, think about the percentages, how to deal with opening inventories, how to deal with closing inventories, how to deal with 40 items, how to calculate the labor production, the labor budget, production budget, material budget. See how these things are connected. The budget is connected. It is a very, very connected component. The budget is connected in that everything that you produce after the sales budget must be in accordance with the demand. Production, labor, usage, whatever function budget there is, must be in line with the overall objective. So see, if you see the discrepancies, if you see the differences in your calculation, then it must be able to give an idea that what you're doing maybe might not be so much on point. Maybe must not be so much on point. So please, the budget question is very, very easy to handle, but I must admit that it's time consuming. This is why I encourage you to let it be the last question you'll be doing in your exam. And just for the sake of interest, I want to explain to you a simple process which I invented on how to deal with the theory that comes, explain the steps involved in the making of the master budget. So, just a quick one. I want to tell you just a few things about how you can make the master budget. So, for us to understand the master budget, I want to bring you back to the comfort of your homes. If you are a son or a daughter in that home, I'm sure you have parents in that home, guardians in that home. So remember, I want to tell you how you can remember the master budget steps involved. It usually comes at 7 marks, 8 marks, usually. So if your parents tell you to make a budget for that household, for that home, they are going to communicate with you. They tell you, and then what are you going to do as a sensible child? You're going to look at the things that are needed in that particular home, because you're the one who remains at home. So your mom or your dad have entrusted you with the responsibility to come up with a budget, because they know you are the one who's maybe cooking, the one who's taking care of the kids at home. So they trust you to that degree. So what you have to do, identify the thing that is more important. So for example, if it's in the kitchen, you are always eating at 23 hours when the kids are supposed to be sleeping, you are waking them up. Why are you eating at 20 hours? Because the cooker only has one plate to wake you. So you're going to tell your parents that you think they should first consider buying a new cooker. Why are you telling them to buy a new cooker? Because that new cooker is preventing your potential of finishing cooking on time. So in the end, you always finish cooking late. So whatever money is available, the first thing you're going to buy is a cooker. And then you can now begin to think of buying pans, buying soap, buying lotion, all these groceries and ABCD. But the most important thing that you first told your parents to buy was a cooker. Why? Because the cooker was the principal budget factor in that particular home. So the same happens in reality. there must be communication from the senior management to the junior management, or to the person responsible for handling the budget. They will tell you, and the guidelines will be given to you. So what you must be able to do, identify the principal budget factor, which in most cases is the sales demand. Why are you identifying the principal budget factor? Because you want coordination between other functional budgets. You want them to be in line with that main objective. Because the principal budget factor is the item which is restricting your organization's potential to maximize profit or to reach their greatest heights. Once you identify the principal budget factor, what do you do next? You are going to prepare the initial budgets. This could be sales, this could be production, and material, labor, etc. Once you do that, it's like in your home, you know the cooker is needed. So once you tell them the cooker is needed, you also look for things that enter the groceries, the soap, or whatever is there that you need, maybe shoes for the kids, whatever is needed, you tell them. And then what do? You go back to your parents and then you begin to negotiate. You see? You begin to negotiate the budget. They tell you, but why have you put this? You explain to them why you put that item. Even in companies, it's the same thing. After you prepare those initial budgets, you're supposed to take that one for negotiation. Maybe your superior will look through it and ask you questions. But why have you put this? You explain. You see? Once that budget is negotiated, maybe they are going to review. You see? They are going to review the budget. They're making sure that it's in line with other functional budgets, making sure there's coordination. No budget is too much, no budget is more than the other. Everything is in line to achieve the main objective. Nothing is offline. When I say offline, I don't mean the internet. I mean off the stream of work. What you want to achieve is in line with the objectives. They want to make sure all that. When the budget is reviewed, what happens next? Boom, acceptance. So you are going to either to accept that budget. And once accepted, now the master budget is going to be made, which is now comprised of the income statement, the SFP, boom, the cash budget. Same thing in the home. You tell your mom and dad, we need a cooker. You plan for the cooker, you plan for the groceries now because the cooker is already there. Whatever money is there, you buy other stuff. Then you negotiate with them. They tell you, why have you put this? You explain to them. And also maybe your mom is going to take that budget to your dad for further coordination and review. If your dad is happy with it and the funds are available, then you're going to release the funds. The last stage is acceptance. They're going to accept and money will be given. So remember, the master budget is made up of how many things? Those are three things. We've got the income statement, the financial position statement, the balance sheet, and the cash budget. Same thing in the home. There are expenses, there are assets that you're going to buy, such as the cooker, and then we have the cash budget. And we're going to decide how much money is available, what's our cash position, how much money do we need to release. So I've made an acronym for what I've told you, and it is called CCNRA. CCNRA is CINRAR. CCNRA. So CCNRA, the C represents communication, the I represents identify the principal budget factor, and the S represents the sales demand, which is the principal budget factor, and the I after the S represents the initial budgets, which are the functional budgets, the labor budgets, the production budgets, etc. And then the N represents the negotiation process. You go and negotiate the budget. And then the R represents the review and coordination. And then the A after the R represents acceptance. Acceptance, which now might include now the things such as the income statement, statement of financial position, boom, the cash budget. And then lastly, you're coming to review the whole process at the end of the period to see whether the actual results were in accordance with the budget. Now that's where variance analysis comes in. So I've invented an acronym. Please feel free to use it. CINRA. CINRA. C-I-S-I. CINRA. C-I-S-I-N-R. You can add the R at the end for review. CINRA. So thank you very much for watching, and I hope that this video will be able to help you with the bits and pieces on the budgets. So if you need to know more, please feel free to send us a message in the comments, or to send us a message in our inbox, or to simply give us a phone call on the number to put on the page. And also we'll be very much grateful, as you have always been doing. You guys have been supportive. Share this video